tuning in tonight. I really do appreciate it. This is something that always kind of blows my mind is the fact that we can attract potentially even cold traffic. So those people that may have never run into us before. So like Rebecca said, I am a 26-year-old real estate investor here in London, Ontario. I have had the pleasure to do some very creative deals, including a vendor take back that sort of set the record straight here for London, Ontario investors. So we did a 96% loan to value vendor take back at 3% for a 13-year term. And then I borrowed the remaining 4% at 0% interest for a 1-year term to effectively get into this property for 100% financing. Following that deal, I was able to house hack the deal, live in it while renting. So that's the first term of the day is house hacking. It's where you can live in a portion of your building and rent out another portion of it. And you might even share the same space like I was. So I was sharing the house with some students and charging them, I think 600 or 650 or something like that, a bedroom at the time, which allowed me to not only live for free, but also make some positive cash flow while I was living here in the building. So that's what I did for my first deal. And then that eventually turned into an Airbnb, a short-term rental. And from there on, I was able to then buy a fourplex and another single family that year. I ended up joint venturing on that single family and bought the fourplex with some borrowed private capital. So I've borrowed private money. I've lent out private money. I've done short-term rentals, student rentals, house hacking. I've done a refinance, so basically a BRRRR as well as a flip. And I've been able to do all of this over the last 3 years in real estate, thanks to working very closely with my mentor, Matt McKeever, and helping him to build out this business that I own and operate today, which is called Make It So Incorporated, one of the largest wholesaling companies in the country. And like Rebecca said, I've had the opportunity to write somewhere in the neighborhood of 1,000 offers in the last 13 months. And we've assigned just under $2 million at this point in assignment fees. So we can talk about some of the conditions and terms today that we use in order to do that and just get some clarity so that everybody's on the same page when you move forward in trying to, enter a negotiation or talk to somebody about real estate investing. You want to make sure that you know the terms and the lingo and everything else so that you're not getting lost, right? We want to make sure we're all first of all, comparing apples to apples. Okay, some of these terms can easily be confused with others. So we want to make sure we're all talking about the same figures and terms to begin with. And then when we're doing that, we want to make sure people can't, take advantage of us or do something with their words, like a play with their words in a way that leads you to have a disadvantage in a negotiation or when entering a business relationship. So just want to make sure we're all on the same page here. And so that was kind of the purpose of this, and was also a piece of feedback from one of our former, from one of the former presentations we had done. Every one of our topics this year now, every single Wednesday is going to be on a new topic that was actually requested from you guys, the viewers. So very excited to be doing that, and very excited to be here co-hosting this with Rebecca. And I hope you guys all enjoy your time here tonight. I do appreciate all of you. Please do not forget, you've got our social medias there. It's at adamjdmartin and at Reccalynnmatheson. If you guys want to give us a follow, there's a ton more content there, whether that's my YouTube channel or Rebecca's daily posts. She's got some great IGTV posts, okay, where she breaks down markets, okay, breaks down your specific markets where you may actually be looking to invest. And after tonight's talk, when you know some more of the terms and you're actually prepared to maybe potentially make an offer, okay, we talk about conditional offers and all that stuff, but when you're maybe ready to make an offer, you can go over to Rebecca's page and actually find some great information on some of the markets you may be considering investing in, like Sarnia or Windsor, Brantford, St. Thomas, London. If we don't already have all those posted, they will be posted. So just look forward to all that great content on Rebecca's channel. And then, of course, if you want to see the previous Problems or Profits webinars, you can come over to my YouTube channel. It's just youtube.com/adamjdmartin, and you will find all of the previous webinars there and their recordings. So feel free to hop over to those and tag us as we're talking. Why not? We'll reshare you, get some exposure, and that might get you one step closer to your next financial partner or your next deal.
Absolutely. So I just want to give you guys the lay of the land. As mentioned, we're going to go over some different terms and conditions when you're transacting in real estate. We're also going to do a quick little live Q&A, and then we're going to go through some off-market deals. So we have a whole roster of off-market deals. Really excited. Some of them you may have seen, some of them you may not have seen. So these are going to be all presented on following our terms and conditions presentation. So Adam, why don't you kick us off with the very first term here on our list?
Awesome. So the very first term on our list, it should be a basic one, but it can get easily confused. And so I want to make sure that no matter how, oh, and I've doubled these up here, sorry guys, but no matter how simple and basic these may seem, it's always good to review this type of stuff so that we make sure, again, that we're all talking about the same thing. So on page 1 of the agreement of purchase and sale, the actual paperwork that you're going to be using to make offers on and to actually, and this might be when you're selling your property too. So if you're selling your primary residence or if you're looking at an investment property, you're going to be using, if you're in Ontario at least, the Form 100. Okay. Now the Form 100, you'll see it is one of the terms down there further on the list as well. This is the agreement of purchase and sale that the Ontario Real Estate Association has put together. Okay. It's the most commonly used contract in real estate. And there's a million ways to represent a purchase and sale agreement. You could have your lawyer draft one up for you. You could pull one off the internet, but we always recommend that you use the Form 100, which is the actual Ontario Real Estate Association contract that they've designed to be incredibly easy to use and easy to read through. But one of the terms on the first page of that contract that some people get confused with, because we don't usually use the term completion date. But what that really means is your closing date. Okay, so the completion date is the date at which everything's going to have to be out of the house unless otherwise stated in the agreement. And the deal is going to actually close, which means, money's going to change hands and keys are going to be traded for that money. And you've got consideration, you've got all those great things that lead to a legal contract. That is when that contract is actually going to get executed and you take over ownership of the building. Okay, so the reason why I even included this one is just last week we had one of the wholesalers asking a question. Hey, closing date is on the 29th of the month, right? The completion date's on the 29th of the month. And we're just wondering if they can move out a day later, okay? Because they're not going to be able to organize their moving company or whatever the situation was. And the answer to that is no, absolutely not. If your completion date is the 29th, that means you actually have to be out of the house and have all the belongings and everything else out of the house by that date. And so it's important that we understand what these terms really mean, because we may throw around the idea of a closing date, but it's important to understand that you can't have anything else in the house or be there yourself after that closing date. So this can happen at all levels of experience. And so it's just worth stating for anybody that maybe is newer to the game here that completion date means you are out of the house and we're trading keys for cash. Okay. And when I say cash, that's another term that gets thrown around loosely that I didn't put on the list, but a lot of people like to use the term cash. I'm a cash buyer. I buy with cash. No, you don't. Okay. Almost nobody does. Unless you've got a company that's very sizable, like maybe one of mine, you don't have the cash on hand. And even if you did, you shouldn't use it to buy a property outright. Okay. In Canada, and particularly right now with what's going on in the world and all of the stimulus that's occurring, mortgages are incredibly cheap. Okay. I just got an email this morning from First National and one from XMC as well, boasting 1.6% for first mortgages that are high ratio. So 5% down. Now, you're maybe not using high ratio for your investment properties, maybe doing 20% down, but they're still looking very, very cheap. Okay, we're going sub 2% here to borrow money. And at that price, why would you ever be a cash buyer? Okay, a cash buyer in air quotes there, because when most people say cash buyer, what they actually mean is they have financing, they're pre-approved, they're ready to go, they know that they can get a mortgage. And that's maybe one more term that didn't make the list that's very important is pre-approved. Okay, what does that mean when somebody says I'm pre-approved? What pre-approved means, and a great way to think about being pre-approved is to think about an actual offer itself. Okay, a pre-approval is essentially like an offer from the lender to the borrower, but it's a conditional offer. Okay, a pre-approval and even a mortgage commitment letter, which is what you typically get once the lender says, I'm good to go on this, we will lend on this. These are both conditional on the terms not changing of the deal. Okay, your credit worthiness not changing. So one of the things that I see a lot of the time as a mortgage agent is somebody will say I'm pre-approved, or they'll say I've got a mortgage commitment letter, but then they show up in a brand new sports car, or they show up in a brand new boat. Hey, there's not even dust on that car yet. When did you buy that car? Oh, I picked it up yesterday. Awesome. Did the bank know, did the lender know that you were going to have that car when they gave you that mortgage commitment letter? Well, no, but I'm pre-approved. Okay, no, you're not, because the situation has changed. Okay, your debt service ratios have changed. Your gross and total debt service ratios are very important when we're looking at conventional financing and lenders. And so a lot of the time when somebody says they're pre-approved, you just have to understand, and especially if this is you, you have to understand that you're pre-approved based on the terms and the price and everything that was laid out at the time of the pre-approval. So if you do something crazy like buy a boat or a sports car, okay, I'm dealing with one of these files right now, they bought a sports car. Well, that's an additional $1,500 of expenses you have every month. So your pre-approval is no longer very pre-approved, because we now have to rerun the numbers and oops, look at that. Maybe that expense puts your debt service ratios above the criteria for that lending product. Okay, so very important to recognize there. And the bank can essentially recant that mortgage commitment letter or that offer, that pre-approval, at any time. Okay, that's in the paperwork. So make sure if you have some sort of pre-approval or commitment letter that you read through it thoroughly. Okay, because there often is an extensive Schedule A, and a Schedule A is a list of additional terms to any agreement. Okay, it's a schedule of additional terms. So now that I'm talking out loud, there's a ton of terms that didn't make our list, like Schedule A, but I'll make sure that if you guys have any questions, drop them in the chat and I'll explain that. So completion date is the actual date of closing. Okay.
Absolutely. Now to build off of that, we will pop some more terms and conditions throughout this webinar. Now, one of my favorite terms and conditions is a chattel. And my favorite story when I first joined the team was actually about someone having a cat as a chattel. So for those of you who don't know what a chattel is something that is included in the purchase. So you can include, appliances, you can include like the old boat sitting in the driveway that hasn't been used in years, but someone actually included a cat as a chattel. And it was because they wanted to make sure that it was going to a good home, wanted to make sure it was going to be taken care of, but they couldn't bring the cat with them. So that was what made the deal, is the fact that the cat was able to be a part of that deal as a chattel. So that's now one of my absolute favorite terms. Okay, Adam, why don't you hit up some irrevocability for our peeps?
Yeah, awesome. The cat getting negotiated into the deal as a chattel was hilarious, because the lady was moving to like a retirement home or something to that effect, and she couldn't bring the cat with her. So she's like, okay, listen, guys, the cat has to go. And she ended up taking an offer that was, to the best of my knowledge, something crazy like $20,000 below the next offer. But the buyers agreed to take care of the cat for the rest of its life. And with that $20,000, she basically stipulated that like that's the budget for the cat's welfare, so food and shelter and that. So I thought that was awesome as well, and just a fantastic experience. It was actually Jeff Weibo was the real estate agent that put that deal together and made it all happen. But yeah, moving on to the next term here, irrevocability. This is a interesting term that doesn't really get properly explained in the actual agreement of purchase and sale, or on any other contract for that matter, but it is on most real estate contracts. And what it is is the actual time that your offer is valid until. Okay, so you typically will sign an offer. Say, for example, we write an offer right now, it's 6/21. Okay, if I'm going to go present an offer, I'm going to make this thing irrevocable for only a couple hours after I get to that appointment. Okay, so if it was me and I'm very confident in my offer and I know I want to build some urgency into a negotiation, I'm going to use this irrevocability as a tool. Okay, and a lot of people don't recognize that this is actually a weapon. All right, this irrevocability can be a supremely powerful tool when you use it properly. And what I want to do here is build in a sense of urgency with my offer by making short irrevocable periods. Okay, so some people, particularly if you're doing on-market offers, they're going to be looking at irrevocable times and dates that may be 3 to 5 days from the time of your offer. But I'm dealing primarily in the wholesaling business with people that are motivated sellers. And guess what the best thing for a motivated seller is? A motivated buyer. And so we want to build an urgency to our negotiation and shrink that irrevocability period down. Okay, so this typically is it's unilateral, right? So it goes one direction. So what happens here is if you write an offer and it's irrevocable by the buyer, okay, if you're the buyer and you set it up for, tomorrow at 6 p.m., that means you can't take that offer back. Your offer's there until tomorrow at 6 p.m. Now, should 6:01 come, your offer now is no longer valid. You're going to have to either change that irrevocable and extend it, or write up a new offer, because technically your offer, it essentially died. Okay, so that irrevocability is how long you're on the hook, and how long you're really giving them to make a decision based on the offer and the set of price and terms that you've laid out on it at hand. So irrevocability is essentially when your offer is good until. You can view it like that. And then when somebody changes it, okay, if somebody changes, say for example, the most common one is you'll present an offer, maybe $500,000 purchase price, and your seller may cross out your $500,000 and they may put in $525,000. Okay, now you guys both initial that change, and now the seller has to send it back to you irrevocable from the seller until a certain time. Okay, so they might say irrevocable till 10 p.m. tonight. Okay, awesome. That means now the buyer has to sign by 10 p.m. to those changes, or cross back what the seller signed and maybe send it back again, irrevocable by the buyer for $510,000. Okay, so it's this kind of back and forth. Now, a lot of that stuff can be avoided, and you guys can go watch my wholesaling course or whatever on that, but a lot of that can be avoided by just finding their why first and negotiating with the actual price and terms that you think are likely to get used on the contract. I typically don't write my contracts until I've had a very good conversation with them where I find out all the facts, right? Why is this person calling me? Why are they calling me today? What's motivating them to want to sell their property at this time? Okay, that's when I approach the contract.
Absolutely.
Rebecca.
Yeah, and so the next term that we have coming up here is the deposit. Now, there are a couple of deposits that are involved in an off-market real estate transaction. So deposit-wise, we need a deposit down on the agreement of purchase and sale. Now, that can be any subjective number. So there's not necessarily a set price. It's whatever the seller is comfortable with. We typically actually only put $500 deposits down to make that a legally binding contract. That's really all that initial deposit is for, is just to show that we're operating in good faith and that it makes it a legally binding contract. Now, with a wholesale deal, we also have a secondary deposit, and that's how we operate with our team, is that we have 50% of that wholesale fee you need to put down as a deposit right upon assignment. And then the remainder of that wholesale fee is paid on closing. So that's what we're looking at for a deposit in a real estate transaction. So when you're buying an off-market deal, there's going to be two forms of that. It's going to be that initial deposit that we would typically put down to make that contract legally binding. And then we also have that deposit that we're going to be putting down from your end if you're buying an off-market deal from us. And that's that 50% of that assignment fee. Now I'm going to skip ahead and I just mentioned the assignment fee. So what is that? So a wholesale and assignment fee, that is what the wholesaler is adding on top of the agreement of purchase and sale price So that is effectively what they are getting for the deal. So when we're talking about an assignment fee, that right now in Canada with most A lenders is not a mortgageable fee. However, there are certainly some lenders that will mortgage that. So credit unions, third parties, private lenders, a lot of those will typically allow for that wholesale fee just to be absorbed into the mortgage. But definitely consult with your mortgage agent when you're looking at an assignment deal. But that assignment fee, it definitely ranges. And we covered this a little bit last week when we were talking about how to actually purchase a wholesale deal. So that assignment fee, you'll see actually very shortly in some of our off-market deals, as that's included in the marketing package. So you'll be able to actually see exactly what that is. And back to you, Adam.
Awesome. Are we on conditional period now then? Sorry,
So I skipped down payment and jumped to assignment fees. So you can talk about down payment and conditional periods.
Awesome. Yeah, I'm loving the 2021. We still have technical difficulties randomly. It's just awesome. Okay, down payment. So your down payment is essentially the money that's going to be required of you to secure your interest in the property with any type of lender. Okay, so typical down payments are going to look like either an insured mortgage product, which is where you're going to likely be putting 5 to 10% down on the property. And then you've got uninsured, which are typically going to be 80% or less loan to value products. Okay, and those are that's the most typical for an investment style property. Now, if you're going to actually live in the property, there's ways that we can get you below 20% down, where you're actually living in the property, but it still may be an investment property like a multi family or something where you essentially live in the basement, rent out the top if it's a duplex, or if there's a secondary suite that has its own kitchen and doors and stuff. That is when we can also get you less than 20% down. But that down payment is essentially what's going to protect the lenders from what's called principal risk. Okay, so there's different types of mortgage products and lending products that you could put in place. The most common is called the first position mortgage. Okay, that's a first charge mortgage, which is going to generally only really go up to 80% loan to value. And then some of those, when they're insured by CMHC or somebody else, is going to allow you to go to potentially 95% loan to value. And when we say loan to value, okay, we're talking about how large is the principal amount in relation to the actual value of the property. And how we come up with value is generally going to be through an appraisal, okay? Or maybe even what we know is 100% going to be the price. But generally, it's going to be an appraisal. And the way that appraisers work is there's three different methods, essentially, to arriving at your appraised value. The first and most commonly used is the comparable sales approach. Okay, so they're going to look at your property. Say, for example, it may be a 3-bed, 1-bath bungalow. And what they're going to do is look inside your neighborhood and at areas that are very close to you in price and demographics and things like that. And they're going to look at all the other sales, recent, relevant, comparable sales in your neighborhood to determine what the price is for comparable buildings in your market. Okay. The second method for an appraiser to come up with that valuation is going to be the income approach. Okay, so a lot of us are looking at rental properties that may already have tenants. And so what they're going to do is look at both the current rents and the market rents. And then we're going to see what's the most likely case here in case there is turnover, and what can we value it at today in its current condition with the current rents. Okay, and so that's where another term that we may want to throw on this little bit of a list here is the BRRRR method. Okay, the buy, renovate, rent out, refinance, and repeat strategy. Okay, this is a strategy to making a strategic investment in a property through cosmetic and other strategic updates like the bedroom, bathroom, lighting, landscaping, flooring, paint, things like that that really significantly raise the value of a building. Doing that and then renting out the building at its new highest and best use. Okay, and then getting a higher rent at that new updated condition. Then you go back to the bank and you get it reappraised. And then typically you're able to get out more than what you put in. So a perfect BRRRR is where you put all your money into renovations, you then go and refinance and you get all that money back, which allows you to then repeat the process on your next building instead of having a ton of equity and a ton of capital tied up inside the building. Okay, it's essentially recycling your capital. Or there's an investment education company out there that actually coined a great term that I love to use when explaining this for the first time to people. It's flipping to yourself. Okay, it's actually a really great term. They're rather ingenious for having coined that, because that really is what you're doing. Okay, you're renovating this building to a point where you can then go back to the bank and essentially flip the building back to yourself at that new higher rate, understanding full well. And this is why the flip analogy is so great, is because when you refinance it, a lot of people overlook the fact that you've just refinanced the building now at a much higher cost basis. And so the loan itself is going to be a lot more. And that's why it actually does look like a flip. You're essentially buying your own flip back from yourself without any of the closing costs and legals and land transfer and stuff like that. Because you're now going to be financing this much more expensive building. And so therefore your monthly costs will go up, but your rents also went up to support that. So that's the BRRRR. And the reason I go into all of this stuff is because it is kind of important when we're thinking about, what's our down payment going to be, plus our renovations, plus our assignment fees, if there's something like that involved, plus our closing costs. Okay, so closing costs are something else that's not on here, but are important to understand. What are you paying for when you actually close on a building? Well, you got some title insurance, which is a fantastic product that you always get, no matter what. Get the title insurance. It's like $500 or something. It might even be cheaper. And it's 100% going to save your ass if you need it. Okay. Happened to me already. I bought the property I'm currently in today, and we had to close a bit early because there was stuff going on with the seller. So I closed 5 or 6 days earlier than what was our original completion date. Hey, using the terms. 5 or 6 days earlier than our original completion date. And when the contract completed, we did not understand that the seller had not paid taxes in a couple of years. So I got this fat tax bill, and it was not fun. And I came to my lawyer and said, hey, buddy, this sucks. And I'm not really interested in paying thousands of dollars of taxes from my seller. And he goes, hey, no problem. We'll submit this to title insurance and see what happens. And bingo, just like that. What ended up happening is I did have to pay it, but I got reimbursed. Okay. So, having a little bit of extra cash on hand will never hurt you in case you have to do something weird like that. But at the end of the day, that $500, I think, saved me 6 or 7. So 1,000, which was awesome. And so okay, closing costs. We've got your lawyer's fees. Okay. And everybody likes to panic about the lawyer's fees. Your lawyer doesn't make that much money. In fact, I question daily why my lawyer ever decided to do such a thing to himself. Because he's miserable all the time and he hates his life. At least one of the two does. So it's like 50%. I'm now, with my small sample size, decided that 50% of lawyers hate themselves. Because this guy doesn't get paid a lot of money and he's always there. And I think the most we've ever paid is like $1,500 for a closing, which is not very much money. So, and for the work that they do, I mean, they're incredible. So $1,500 will get you closed with any lawyer. It's probably a bit less. Our average closing is like $1,200. And if they're just looking after some paperwork for you, like our assignment paperwork, something like $400 or $450 for them to do that. So you're going to pay that. If it's your primary residence or your first purchase, you may not be paying land transfer tax, like if it's your first time home buyer or whatever. So I didn't pay first land transfer tax on the first purchase I made, which saved me, $3 or $4 grand. So that's kind of nice if you didn't know that. And then there's a lot of random fees that happen after that as well, including utility supposedly deposits, but you're never going to get it back. So just consider it an expense. So you've got deposits that you have to pay with, like, here we've got London Hydro, and then you've got Enbridge now. I can't remember what it was when I first bought, but it's now Enbridge. So you probably have to pay them some sort of connection charge. And there's all these fees everywhere that you end up having to pay. So I would set aside an extra $1,000 or $2,000 for those random fees. And then after that, you know, if there was a realtor involved, you're paying them out of the actual financing and stuff like that. That's usually built into your purchase price. But if you are paying a wholesale or assignment fee, like Rebecca said, that is potentially a fee that you may have to also pay in cash, okay, depending on the wholesaler, depending on the situation, and depending whether or not your lender wants to actually let you borrow that assignment fee, which is now come to my attention that there may actually be one or two lenders that are willing to do that for you. So if anybody has questions about how to finance a wholesale fee, reach out to Rebecca and she will handle your questions. You like that?
Absolutely, absolutely. Well, we actually have a few questions right now, so I will handle some of these questions. So we have a question about what even is wholesaling from Janet. Right. And Janet, we actually did a fantastic webinar that you should check out on Adam's YouTube channel last week, and we broke down exactly what wholesaling is. But to give you a rough overview, it is essentially assigning a deal to another party off market. So what happens is a wholesaler will lock up an agreement, which is actually the Form 100 agreement of purchase and sale with a seller. And then there will be an assignment clause in that agreement that will allow them to assign that deal to another investor or to another party. And so when that assignment happens, there's an assignment fee associated with that for essentially finding the deal. And in terms of wholesale fees, we will definitely show you a few examples of that in some of our actual live deals. So we have another question here just about, is there a way to look at all forms like the Form 100 and 145 without being a member of the OREA? Absolutely. You can actually just Google it. And you can straight up find all of these forms on Google. But just to break down, so the Form 100, again, is that agreement of purchase and sale. That is between a buyer and a seller. The Form 145 is an assignment agreement. So if there is an assignment clause in that Form 100, then you are able to fill out a Form 145 to assign that deal to another party. And that is the difference between those two forms. We also have another question here for you, Adam, just about can you apply for a mortgage as purchased with improvement with off-market property? That's from Nada. Nada, can you clarify your question there?
Well, no, it's a great question. So if it's a private deal, a private deal does get treated somewhat differently with what's called the business development manager that you might run into at the lender. Okay, so every lender has these almost like sales people that represent them on how their criteria are being met and how the products work and what sort of products and features they have available as a lender. And those people are called business development managers. Okay, those people are the people somebody like myself will give a call to and say, hey, I've got this borrower, they've got this type of credit, they've got stable employment, they've got assets, they've got this much available for a down payment, and they're looking to buy this property for purchase plus improvements purposes, okay? They're looking at a building that's potentially in disrepair, and they want to do some strategic renovations with it. They've got some experience in this area, so I believe that they've got the capacity and knowledge to actually execute. So would you guys be willing to do a purchase plus improvements product with them? And so, when that conversation can go over really well and there's not a bunch of other red flags, generally speaking, all the lender's going to ask us for is a brand new appraisal that would actually show the value of the building being possible to have the future value if such improvements were done at what you guys are planning for. Okay, so the purchase plus improvements, for anybody that's not really aware of this, is typically going to be like, they'll give you a mortgage and then like essentially an expansion on that mortgage in the form of either a home equity line of credit, or they'll give it back to you after you spend the money. Okay, so a lot of people don't really understand how the purchase plus improvements work, but more often than not, the product will have it so that you actually pay for the renovations and then they reimburse you for those renovations. Okay. And then when that's not the case, there's a lot of cases where they'll have like a HELOC basically that you pay for your construction and renovation materials with, but then they will typically, like, I guess we're not even allowed to say them, but the bank will then typically close out that HELOC when you're done the purchase plus. So there's pros and cons to using these products. Another way to get this all done is to just borrow the money privately or borrow with a second mortgage, or go with a B lender, because your B lenders are going to give you a lot more capacity in terms of doing maneuvers like that. So yeah, you can do a purchase plus improvements off market. It's just going to require an appraisal, and they don't love it when you don't have an MLS listing. And so sometimes they're a bit sticky about that, but as long as you get an appraisal where you instruct your appraiser exactly what it is that you're trying to do, which is, seek out the current value of the building and then the future value, the after repair value at its highest and best use, then you can definitely do that. And then one more note while we're on the topic of appraisals again, is just make sure that you guys are going into every appraisal with fully loaded. Okay. There's no excuse to go into an appraisal situation unprepared. And a lot of people get this, like, they fall victim to the expert fallacy, which is what happens with lawyers, accountants, everybody. Okay. And it doesn't stop there. It goes all the way to appraisers. And so you may think that the appraiser knows something that you don't know. Well, first of all, they might, and they probably do know things that you don't know, but they don't know everything. Okay. And so what I would really suggest for you guys is every single appraisal that you have, you are going to be there. Okay. You're going to show up to that appraisal and you're going to have an impress the bank folder prepared. And what that means is you're going to go in with comparable sales that you've selected, handpicked, that support the after repair value that you're seeking. Okay. You're going to go in there and actually support them with some great data. Like, hey, here's this building, it may be in a slightly adjacent neighborhood, but I believe that it's the exact same layout or a similar layout. And this is an apples to apples comparison. I would love it if you would use this comparable or consider using this comparable in your report. Okay. And more often than not, 9 times out of 10, the appraiser is going to look at what you suggested and think, yep, as long as I can back this up professionally, I'm going to include that comparable. Okay. Now, if you've gone through and combed through good comparables and bad comparables, you can at least pick out some of the better ones and use that to influence your appraisal. 100% of the time, I have been able to go to my appraisal and influence it very positively. Okay. So please go to your appraisals, make sure you attend them, make sure you're using your whole toolkit that's available to you. Okay, especially if you're looking for something like a purchase plus, or you're looking to refinance a property that you've got money in. Okay, the last appraisal I got, it should have appraised for 250. It really should have, but I showed up with some solid comparables and there was very little inventory on the market at that time. I showed up and I said, hey man, these 3 properties, they sold for 285. I'm looking at 285 here and I don't see any way to look about it any other way. And the appraisal report came back. And there it is. Sure enough, my 3 comps and were appraised at 285, which was just ludicrous. Like that was such a ridiculous appraisal. It was unfair. But I had a decent amount of data that suggested, yeah, these are 2-bed, 1-bath houses. These are, got the same finishes. They've got the same quality. So we were able to make that a comparable, and that really helped me out because that got us all of our money back, plus I think it was a 6 or 7K float after the refinance that we just kept in the bank account for when the next thing broke. And the next thing did break, and it was the air conditioning and furnace unit. And then when they were fixing the air conditioning, they tagged the chimney for not having a new liner or something, because the hot water tank was vented through the chimney or something crazy. So this is what can happen when you get into real estate. You got to have a float. So if you can influence an appraisal just a little bit more and you get a little bit more on that refi, and then that saves you from having to put money back into a property, bingo, that's winning and investing using free money, which is borrowed money to service your debt and your assets.
Absolutely. And Adam, we have a couple of questions to build off of this talk because I love it. Can we hire an appraiser? I thought banks only could send them. And also to build off of that, aside from showing solid pieces of comps, are there any other things you might want to show an appraiser, maybe rent prices of those comps? And also, I'm going to load a third question onto there. Won't you lose your mortgage insurance costs after the appraisal?
I don't know about that last question, to be honest. You probably have to Google somebody's rules about that. But you know, you don't really hire an appraiser. Your mortgage agent does, okay, or the bank will send one that is accredited. But there's really just a couple accreditations that. Sorry, is that somebody's echoing here? Can you mute Cash? There you go. There's really only a couple of accredited bodies of appraisers, okay? And so they meet, they're like a license, okay? Imagine realtors, they've got a license to do that. Appraisers have the same thing, and there's really only a couple places to get that. And so, you know, every lender has a list of approved appraisers, and generally speaking, there's only a few companies. It's like anything else, right? 20% of the companies do 80% of the work. And so you can, generally speaking, find an appraisal company that you like if you're a repeat buyer, or if you're not, talk to somebody that is a repeat buyer in your market and say, hey, do you know who's been doing your appraisals that have been coming back favorable? And you might find out the name of the company that's doing the favorable appraisals. Awesome. Request that company from your mortgage agent, or better yet, ask your mortgage agent who they usually call. Okay, because as a mortgage agent, you've got this list of companies that's like 100 companies that can come do your appraisal. But I only ever call one or two, right? Because I know the guy and I'll meet him there, right? And when I meet him there, I can bring my comps, and I can bring the to this other comments. Other comment here is like, should you show them the rents of these other places? Absolutely. Any data that I can get. And the nice thing is, when you're part of different communities, like Cashflow Tribe, for example, you can go in there and say, inside our actual website, we've got groups. It looks almost like Facebook on the back end. You can go in there and say, hey, who's recently, you know, purchased or sold properties in London, Ontario, in the Old East Village? And in Cashflow Tribe, there's probably 10 people that have just done that. Hey, awesome. I would love it if you could tell me what your appraised value was. Okay, so that all of a sudden you can turn around and say to your appraiser, hey, it looks like somebody just appraised 123 Main Street for, you know, 400 grand, and I'm only looking for 380. Do you think that that's pretty good? And your appraiser might take that into consideration on their notes. Okay, so always share the rents, always share photos if you have them, like if it's a previous listing of another place that sold. Because for me, I sold you know, it was a terrible little house. It was like 800 square feet, but we put nice finishes in it, and so it looked pretty. And the guy was like, yeah, you know what, it looks good. So we'll compare it to these other better houses. So that's,
Absolutely.
I think, all I've got to say there. But I have no idea if you lose, what was that actual question? Won't you lose your mortgage insurance cost after a second appraisal? I have no idea. But I don't know why you need two appraisals. Just show up prepared for the first one.
100%. Okay, next point that we have here is our vendor take-back mortgage. Now, this concept really blew my mind when I first discovered it. It really is such a great both negotiation tool in interacting with sellers, but also a fantastic win-win situation. We are actually really taking on in a really big way vacation rentals and cottage properties with wholesaling. So one thing to consider with those vacation properties and cottages is that you're going to be taxed heavily when you sell your property. So you need to consider that in making that transaction go through. So what you can do is actually take advantage of a vendor take back. And this is beneficial to both parties in these types of transactions. So if you have a lot of equity in your home as the seller, you're able to do what's called a vendor take back mortgage and actually hold on to a portion of that property, hold on to that mortgage, and basically be the lender in a way. And the person purchasing that property will then make those mortgage payments to the owner. So that's going to be another great way that will allow for that seller to actually delay their capital gains tax when they're actually making a real estate sale, and has a ton of other benefits. And Adam, feel free to build off of this, because this concept absolutely, like, completely blew my mind when I first discovered that this was a thing. Because I always had this misconception that you had to go through a bank in order to get a mortgage, but this is definitely not the case. And there are so many other creative pathways when you are negotiating in real estate.
Yeah, awesome. The vendor take back is something that I have talked at length about, because I went on a bit of a crusade to bring this thing back. The vendor take back was a popular strategy, or at least a more popular strategy, in and around the late 80s. Okay. And for those of you on the call that remember the late 80s, you'll probably remember very high interest rates. Okay. A lot of people lost their shirt actually in real estate, because the interest rates were approaching 20%. And I'm thinking in certain cases even went above 20%. And so, the average consumer right now probably can't afford their current house at 5%, never mind 20%. And so what you saw was a lot of leverage, a lot of debt in the market, and then some really high interest rates. Now, when that happens, it really stalemates the whole market, because not only, like, both sides are stuck in a position that you can't win on, because you can't sell because the people can't afford to buy. But if you need to sell, you need to sell, right? And so what would happen is the price then would drop dramatically. And if the price is dropping dramatically, so is all of your equity and everything else. And so what people started doing is they said, you know what, fuck this bank. This bank sucks. Okay, we're not going to the bank because the bank's charging 18, 20%. What if I just went directly to you and say, what if I wanted to buy Matheson's property? And I said, Matheson, you got a house. You've been holding on to this thing for 10 years now, and you probably put 20% down when you bought it. And you've been making regular payments for the last 10 years on it. And so you're probably halfway through your amortized loan, because usually loans are amortized 25 to 30 years, right? So you're halfway, maybe a third of the way through your loan. And so you've got a bunch of equity. Okay. So you've got your 20% that you put down, plus you've got all the principal that you've been paying back as part of your blended principal and interest payments over the last 10 years. So how about, instead of me going to the bank to try and finance 80% of the price that you need today, okay, to be able to, you're selling your house because you need to move for work or whatever it may be. Why don't, instead of me going to the bank to get that, I just borrow it from you, but you get to tie your debt, okay, you get to secure your debt to the same house that you're selling me. Okay, so as long as you trust that I will pay you, and more importantly, as long as you trust that your building is worth what you're asking for it, okay, because what we're saying here in this transaction is, I'm going to leverage my seller's confidence here in the building. So if you're going to say to me, my house is worth $500,000 and that's what you should pay. Okay, cool. Let me flip that around on you then. If your house is worth $500,000 and the bank's gouging me on interest rates, would you not give me a loan secured against that valuable house that you're trying to sell me? Okay. And in the process, I'm going to be able to give you some other benefits, including being able to pay more, right? Because if I'm not paying the bank expensive money, like 20% in the 80s, I can then afford to pay you a higher than normal interest rate, because I've just saved 15% or 17%, depending on what you're willing to give me the money at. Okay, so we can both win here. You can sell your price, you can sell your house at the price that you want to, okay, where not many other people may be able to afford it, given the interest rates of the time. And I can also get into the opportunity, and if I'm an investor, I can then rent it out. Okay, because what else happens when you've got 20% interest rates? Not a lot of people buying, while people need shelter. Okay, the same number of people need shelter. What happens to the rents? Okay, well, people got to rent because they can't buy. Okay, all of a sudden, rent is running rampant, right? Rent's going to go up. There's going to be more people renting. Supply is going to go down. Price is going to drive up, and to the point where it matches and it hits equilibrium. Thanks, Adam Smith. hits a bit of an equilibrium there, and we find out what the market price is, right? With perfect competition. But until that point, the rents are going to go up and the supply is going to go down. So that's just how that works. And then today, if we modernize it, and why I was on such a crusade there for a long time is I was getting kind of pissed off as a young millennial. Okay. I was not around in the 80s at all, period. Okay. I came for 1994 was my party year. And now I'm, 20, I bought my first property when I was 24, but here's me at 24 thinking, how the hell does anybody buy a property in 2018 when goddamn houses, like where I'm from, Collingwood, where I'm from, houses are $600,000. How the hell does anybody buy a $600,000 house, right? My parents grew up working in factories, making like 40 or 50 grand. You can't buy a $600,000 house with 50 grand. That's not going to work. And so, I started to have to think outside the box. And my solution to this was, oh my God, that strategy from the 80s, the vendor take back. So that's how, again, this is one of the things I described at the start of this talk is I got into this property that I'm currently sitting in today for 96% vendor take back, which means I borrowed 96% of the purchase price from my seller. Okay. And the reason that was able to happen is because he was really bad with money and he inherited this house, but he spent all the cash that he inherited. So this house is essentially his nest egg. And so what I offered him was an annuity. Okay, I'm going to give him monthly payments on this property for the next 13 years, but it's in my name. Okay, the debt is secured in his name against the property that he claimed was worth what I bought it for, right? And so what I offered him was 3%, which was the going bank rate at the time, to hold on to his money for him and pay him monthly. Okay. And what that allowed him to do, not in this case, but if it was a rental property, that would have also allowed him to defer the taxes on the sale. Okay. So you can actually defer your capital gains. You can defer for up to 5 years. Okay. So your longest term, if somebody's just trying to avoid but defer some tax, you can't avoid taxes, unfortunately, but defer those taxes, you can go up to 5 years. And what that really means is the burden of the taxes from the proceeds, the actual profit that you're making on the sale of this property can get pushed across 5 years, effectively lowering that tax rate. So that's really awesome. And then Grace just asked, and it's a great question, great follow-up question. The actual vendor take back, it sounds like this big strategy or like this big thing. It's literally like 6 sentences on the back page of your offer. Okay. So right on the Schedule A, and really all it says is the seller or the vendor agrees to take back a mortgage of X, at an interest rate of Y for a period of Z term, right? And so that's really all that this thing says, and it's a simple clause. And then what we added to mine in particular was assignability. Okay, so I can actually assign this mortgage to anybody, so that if you want to approach me today and give me an offer on this property, I can actually give you the mortgage that I currently have on the property and assign it to you, as long as you and then it's your burden then to pay Mr. Elliott, my financier, my vendor in this case, for the next, now 11 years to go. And so I've now borrowed his money. I'm giving him interest on top of an already increased purchase price. Okay, so the same situation happened. The way my pitch went is, Mr. Elliott, you probably remember the 80s where there was 19 to 20% interest rates, making it very difficult for people to buy real estate. Now, look at me, 24-year-old kid in front of you, trying to figure out and make sense of how you spend, hundreds of thousands of dollars on a property in 2021. And my challenge is I can't afford to go to the bank and put down 20% for this property. But what I can do is afford your monthly payment. So if you would just, walk with me for a minute in this little fascination of mine with the vendor take back, what I'm suggesting is in 2020, or this was 2018 or whatever, the challenge is not interest rates, it's purchase price. Okay. And as you know, probably since you bought this property, the property's appreciated massively. You might have paid 150 for this property, and now I'm paying 2 freaking 25. And so you can see there that you've made a lot of money. But now someone has to pay for that money to be yours, and it's me. I'd love to pay that money and give you that profit. Just I want to spread it out over time. And so that's something that he really understood, and we were able to do that deal. And since then, I've actually facilitated 5 more vendor takebacks. So it's not a one-trick pony, and a lot of people were like, okay, that's cool one time, but how do you get anybody else to do it? And I did it 5 more times. So I'm here to tell you, you can do this. It's super easy. Well, it's not easy, but you just need to know what you're talking about, and you can talk to people about that as an option. And what happens if the buyer defaults? Same as any other mortgage, okay? It'll come into a power of sale situation between the vendor, okay, your seller's lawyer, and yourself, right? They're going to say, hey, you've got X amount of time to pay up here, or we'll put you in a power of sale situation, which is where they can then force the sale of your property at market rate, okay, at the market price.
Absolutely. Now we have our last term here before we're going to move on, and I want to make sure to be conscious of everyone's time because it is 7 o'clock, but we still have some fan-flipping-tastic off-market deals that I want to make sure that we get to. So Adam, can you just give us a real brief Coles Note summary of cap rate, and then I'm going to jump into our off-market properties.
Yeah, Coles Notes version of cap rate. This is a term that a lot of multifamily investors like to throw around. I personally don't like the cap rate at all. I think it's something that people use to sound smart, but then they're not really thinking about it. This is generally used to make an apples to apples comparison to 2 investments that may or may not be the same. Okay, they might be different styles of investments, but you're just comparing how much the capitalization rate is. So all you have to do is put your net operating income, okay, on top of your purchase price, and that will inform you of your cap rate. Okay, so you might get something like right now in London might be a 4 or 5 cap rate, which is very low, not very attractive. But if you start seeing a 6 or a 7 or an 8, or if you're back in the 80s, you're probably seeing 12s or 14s, and those are crazy. But generally speaking, it's to make apples to apples comparisons between investments.
Absolutely. Awesome. Thank you so much, Adam. I'm going to change up the order a little bit. So I'm going to push question and answer time. And I'm just going to hop right into our off-market deals. So before I get into that, just a reminder, guys, if you're looking for vacation off-market deals, make sure that you subscribe to our off-market cottage buyers list. That's cottagebuyers.com/private deals. And our main off-market deals page, this is for all across Ontario. We started in Southwestern Ontario and have now branched all across Ontario, including east of Toronto. So make sure you stay tuned for private deals there at www.mattmckeever.com/private deals. Now, one other note to you guys is that we have been rapidly expanding our team. So we are, again, moving into new markets and bringing on new team members. We're actually actively seeking an executive admin for our team, as well as some wholesalers. So if you know of anyone who might fit that mark, please do send them my way. You can just message me on Instagram at Reccalynnmatheson if you know of anyone who's looking for some work and to be a part of an awesome team. If you want the link to the POP merch, it's just right here, teespring.com/stores/Matt merch. Okay, let's get into our off-market deals. So I'm just going to switch screens here so that you guys can actually see some of the buyers packages. And thank you, Adam, for posting all of those links into the chat. So I'm just going to go through deal by deal here. And we actually have a surprise deal as well that literally just got locked up during this webinar. So really, really pumped to talk about that one too. In total, it's going to be 6 off-market deals. So I'm just going to share screen here. All right. So you guys should be able to see my screen. Give me a thumbs up if you can. Yes. Okay, wonderful. So here's the one that we're going to start with. I'm really pumped about this one. This is a great flip in Niagara Falls. and it's literally minutes away from the actual falls itself. So fantastic location. I'm just going to pull up the buyer's package, and then I'll browse through the photos briefly as well. So this one, just to show you guys, it is a 320 K property, and that's a 50K assignment fee on that one. It's going to be a single family flip or burr. And this is the address here on Wilmot Street. Just to give you guys a little bit of contextual background as well, the seller just wants to move into a house with her boyfriend, so she's selling this property. After repair value, we're looking at a conservative value of $435 based off of the recent and relevant close by comparables. So I'll definitely put the comparables on the screen in a minute here. It is owner occupied, so it's great because it's actually coming vacant on possession. This one, again, is located minutes away from the falls, and market rents about $1,500 depending, because this is actually a 3-bedroom. So 2 of those bedrooms are upstairs, 1 is on the main floor, and then we have 1 full bath on the main floor as well. In terms of overall condition of this property, definitely just have some things that are a bit outdated. So you can see just by this photo here of the kitchen, those cabinets, they're just a bit outdated. Overall, you'll want to go in, do some paint, flooring could be redone, and some updates to the kitchen and the bathroom. We've also got a 2-car garage with this one, which is fantastic. There is a shared driveway with 2 to 4 additional spots there. Recently done roof in 2017, so not too old. And then in terms of a few things that you should know about this property, so there was a bit of moisture that we noted in the basement, just a bit of molding kind of forming in the corners. Another thing to note there, very, very minor thin crack in the foundation. We did take a photo of that. It's nothing to be crazy alarmed about. It is a block foundation, so that can be repaired, but again, you'll see in the photos that it's not anything major. I've seen some pretty major foundation cracks, and this is not one. And then one other, Matheson knows, we saw some pretty major foundation cracks in that one property that we walked through. So dried up leak from the ceiling in the basement as well. The seller thought that it was from some piping down there, but I put unknown cause there just because she was, again, kind of unsure. Location, again, super close to Niagara Falls, great location, tons of amenities nearby. And these are the comparable sales. So again, we were pretty conservative with our ARV. We set around that kind of mid kind of 4 range, but there's actually a property close by that went for 490. So it really depends on the level of finishes that you're going to do here, and just the level of depth that you're going to commit to that renovation. So again, that's our first property on the docket for today. So there's a folder here with some awesome photos. I'm just going to browse through these because we do have several properties to get through. I will be sending out these packages after, so you can filter through and really take a closer look. There's a couple of videos here just to like really dive deep into all of these properties and get a greater understanding of them in more detail. Okay, next one that I'm going to go through is Chesapeake. So this one is actually in Scarborough. I was actually talking with a realtor in the area today, and they are so low in inventory right now. They were trying to ask if this could be on market, and we're like, bro, this is an off market deal. So it's definitely a lot of demand for these types of properties in Scarborough. So awesome property here. I'm just going to give you a little overview. It's actually a semi-detached with a secondary suite. 33.5K wholesale fee in this one. Again, fantastic property. It's not in bad shape by any means, but there's definitely some value add potential here. So it is currently being rented, but it comes vacant on possession, which is a great term. Anytime that we're looking to negotiate a wholesale deal, we're looking to get a banging price or some really fantastic terms. So anytime that we get a property vacant on possession, it means that you guys can go right in and do your work, or re-rent it out to a new set of tenants and start from a clean slate. Now, just to give you a sense here to this one, ARV around 850. So again, doesn't need a ton of work, but just going to give you a little overview. So this would be a great burr, flip, or long-term hold. This is a 6-bed, so 3 up, 3 down, and a bath in each unit. There is a separate entrance to that downstairs unit as well. Brand new windows and doors, great condition. There are three parking spots in the driveway. New furnace, new AC, copper wiring, 100 AMP panel. We're looking at 2 sheds as well, a little small back deck in the back. So great little property here in Scarborough. Again, in terms of renovations, like, I mean, you could do some renovations here. They're all in good working order in the kitchen, bathroom, flooring as well, a couple of spots where maybe you could like update the flooring if you wanted to add some value, but really great opportunity to step into as an investment property in your portfolio. Again, we have some comparable sales here. So we're in that range, 850. This was actually the most direct comparable, but these are all in the same kind of area. But one thing to note here is that this last comparable here, so it was around that 800 mark, 791, but it was sold in August. And since then the price to December has actually increased significantly to that 850. So now moving into January, it's increased even more. And again, Scarborough, very high demand area. Next one, moving right along. This is actually our first, what I'm going to classify as a pseudo cottage deal. Super excited about this one. It's right in between, right in between the bays. So we have Georgian Bay as well as, we'll just load it up here. Georgian Bay as well as just to the kind of north end of Aurelia in Coldwater. So this is 48 acres of land. So massive, beautiful old century home, beautiful brick finishing on the outside and some exposed brick on the inside. So this one's super, super unique. So much flipping, literally flipping. Hopefully you can go in here and flip this one. Potential in this one. I love it. We're just going for a nice, easy 35K fee on this one. And again, rustic old century home. The master bedroom actually overlooks the river that runs right through the property. And it's great for fishing. You can catch some salmon and trout in the river. So this is just so much potential in this property. So we conservatively estimated the ARV to be around 1.1 million. Again, very dependent on your strategy here as an investor. If you want to go in with some high-end finishes, you can probably increase that, and with some nice landscaping as well. The owner just straight up didn't want to complete the renos. He's been working on this project for as long as he's owned it. So he's just kind of ready to move on. So really great potential spread here for an investor coming in. A couple things to note. So it is technically a 5-bed. The owner did combine the master bedroom and one of the other bedrooms just to make that space bigger for himself. He does have one tenant, which is like a family member, so it will be vacant on possession. Now, there are 2 baths in this. Again, it's 48 acres of land, so much potential opportunity there. And then we're looking at lots of different things on that land. So nice forested area. You could even have some hiking paths there. It is on a septic tank. It is an older water heater, oil furnace. There is a wood stove, which is a nice little feature. It isn't hooked up, but it adds some class, that is for sure. There is an AC window unit. Now, this is actually the attic area. So as you can see, this is actually not insulated up here. So as soon as you add some insulation, it will actually significantly bring down the heating costs of this property. The panel here, 200 amp, unfinished basement, and it is well water. And again, we've got some nice exposed brick on the inside, which really adds some character. Now, the closing date, it is negotiable, but set for May 1st. And just a couple of things. So definitely a little outdated with the bathroom and kitchen. You could do some painting, flooring, and certainly some landscaping in the springtime. So There is actually $10K in new windows that's just coming included in this deal with the house. It's not installed yet, but you just get that with the deal. Definitely some areas that you'll need to go in and do some mudding and taping as well. Location, again, we're in this fantastic sweet spot, really, really kind of in that secluded space where you're close to the water on both ends and not too far away from Aurelia, but it's minutes away from Coldwater. So 8 minutes to be exact, but all of the amenities are there. So your LCBO, you know, different places to eat. And of course, we've got things like the Moonstone Saddle Up Tackle Shop right nearby, because we're right in that cottage country. So, you know, we're not going to see the superstores of the world, maybe if you go all the way down to Aurelia, but close by amenities, you're looking at some saddle up tackle shops for that river fishing. Okay, comparable sales. So a couple of comparables that I've included, and I've actually included a big spread. So again, this area, there's so much potential here. And with these kind of vacation properties, with these properties that are more in that cottage region, you're going to look at a huge spread in comparable sales. So this one that's 1.5 million, again, if you read the description here, like it has the same acreage, but they've just turned that into this oasis. So, I mean, there's three kilometers of mountain bike and tranquility trails. There's a pond, a barn, you know, a maple sugar shack, a dog kennel. So there's a bunch of things on this property that they've really built over the years. This other one, it was again around that million mark, just under, and that was sold in September. It again, finished basement, decent finishes, not a whole lot done other than that. So huge spread in potential here. So if you want to just come and just do some basic finishes, you're looking around that 1.1 million mark. If you want to make this like the biggest, baddest oasis ever, then you could definitely get a significant spread here. So that's our Moonstone, and we have some photos that I'll briefly go through as well. So again, you can see definitely some updates, lots of potential in this one, lots of land to work with, that's for sure. Next one that I'm going to go through here, this is actually another deal not too far outside of London. So it's in Clinton, Ontario, if you guys are familiar with that. So recently we've had a lot of deals just absolutely fly off the shelves. So this is specifically going to be an or best offer deal for this specific deal. So we will be doing a walkthrough for this one on Friday. We'll do walkthroughs for the other ones too, but the way that this one in particular is going to work is we are going to do walkthrough on Friday, and we will take offers up until Friday at 9 p.m. on this particular deal, so that it will give other investors an opportunity to actually see it first, whereas the majority of our deals are just like first come, first serve. So straight up, you call me up with an offer, you shoot me a message, and we're gonna do the deal like that day, that moment, that minute. So like this is a unique one that we're just testing out a different strategies so that more investors have an opportunity to actually go through and see it. So Clinton, just to give you a little rough overview of Clinton, owner-occupied single-family home. The seller is moving up north, so it will be a perfect project for an investor who wants to do a quicker flip or just straight up rent it out right away. Because again, it doesn't need a ton of work, very similar to the other one that I had been talking about. So ARV on this one is estimated at $330K based off of recent comparable sales in the area. Really good bones in this one, definitely in working order. And you know, you could do some cosmetic renovations or just rent this one out immediately. So this is a great flip or buy and hold, as I said. It comes with a new set of washer and dryers. Again, we've got some very green countertops and some very interesting choices in flooring. So you could definitely do some cosmetic work here, but nothing crazy that's needed. In other areas of the house, they have some really nice flooring going on. So 2 bed, 1 bath, and we're looking at the building being built in 1952, 6-year-old roof, and the windows are mostly vinyl, just a couple of windows in the basement that are still wood. And again, this kitchen is where you're going to want to spend the most time if you're going to do any renovations, because there is some press board ceiling going on. Other than that, all of the rest of the house, again, fine when it comes to condition of like ceiling and flooring. We're also looking at a couple of things. So partially finished basement, 7 foot, not inches, 7-foot basement. So ceiling height. It used to actually be an additional room in the basement, but that was just taken out for a little extra space for the kids' playroom. So you could actually put that additional bedroom back in pretty easily and turn this into a 3-bed instead of a 2-bed. Another thing too here, just a few more photos for you guys. Again, location, we're really close to Clinton, so like 5-minute drive to Clinton, and it's just in this nice little area with some other homes. Comparable sales, we're looking in that kind of 300 to 360 range. So these are just recent and relevant comparables. Again, we kind of estimated our comparable to be around 330, so right in that conservative middle ground, with just a 25K assignment fee or best offer on this particular deal. Now the next one, I'm just going to reshare my screen here for you guys, is actually a 16-unit apartment building in Windsor, and this one, Mark Smith is partnering up on this one. So he found this property, and we are going to actually be doing, for any interested investors in this one, we're going to be going into full detail actually tomorrow at 2:30. So it's going to be myself, Jeff Wybo, Josh Finlay from the mortgage team, as well as Mark Smith, going through all of the details of this 16-unit building, just for investors that are specifically interested in this one, because we have a full financial breakdown of this deal, and want to actually go through this one further. So I will be sending out these buyers packages following this webinar again. So this one is 16-unit in Windsor, and definitely there's a potential upside on rents as you continue with it. I'll just scroll through this briefly. Again, we have a full purchase analysis done on this deal because it is a larger apartment building. So when you're purchasing larger apartment buildings, it's about the numbers, right? Data, not drama here. So we have included all of that for you, and we'll be talking about some different strategies on how to really make this property work. Here are just some brief photos as well for this 16-unit apartment building. And again, we have a full breakdown of all of the different rental income coming in. We do have one unit that is coming vacant, one of the bachelors. So this is what we're going to be talking about, again, in more detail tomorrow at 2:30. If you're interested, make sure you shoot me a message at deals@impactclick.com. Now, the final deal that we have, I actually don't have a package for because it was literally locked up while we were on this webinar. So I know I had included a Cambridge deal in my email. That one actually went. So I have another Cambridge deal. So this is the rough overview of this Cambridge deal, because I don't have a beautifully packaged presentation for you on this one. So I am literally going to read the text from our wholesaler. So it is a quick lipstick flip, or kind of that wholesale flip. So doesn't need a ton of work. We're looking to really just clean up the house a bit, and you could totally put it back on the market if you wanted to in the spring. The demand is definitely big in this area. It's in Hespeler. So we're looking for kind of mid 700s for this deal, mid to that top low 700s. So I don't have an exact number for you today either. But that one is definitely going to be another one coming out shortly. So again, if you do have any interest in any of these deals presented today, all 6 of our off-market deals, make sure that you do send me a message. So that's going to be deals@impactclick.com, and I will again be sending out all 6 of these deals to the list following this webinar. If you're interested in any of these deals, make sure that you let me know. Our last 4 deals have gone completely sight unseen within a day of me posting them. So definitely insanely hot right now, and really excited about all of the deals that I have talked about today, because it's definitely picking up in demand with off-market deals. Cool. Back to you, Adam.
Awesome. Yeah. Thank you guys so much for tuning in on this lovely Wednesday evening. We're going to be back here doing this every single week with a new topic, and we're not going to miss a single one until the end of the year. So if you want more info on those deals that Rebecca just laid out for you, she is going to be sending a follow-up email with our survey and everything else. And you can also hit her up at Reccalynnmatheson on Instagram, or send an email directly to deals@impactclick.com. And then I would also just love it if you guys would come over and follow me on Instagram, or at least go subscribe to the YouTube channel, where you can also find all of the replays for every other webinar we've done this year. And we're going to be posting those every replay there as well too. So say, for example, next week, you're doing something, breaking provincial laws by leaving your house and attempting to do anything, I guess, is breaking the law at this point. But if you're busy next Wednesday and you wanted to actually watch that replay, you could just go back there. And if you subscribe to the channel, you'll see when it comes out anyways. So you'll see that I'm going to try and post them by the Friday of the week. So either Thursday or Friday, I'll post the actual webinar from the Wednesday. So you can go back if you missed it, and you'll be able to see whatever we were talking about. So really appreciate all of you guys. Rebecca's going to send you out a handsome little survey here for your feedback. Please do fill that in, because it actually informs us what to talk about for the coming weeks, as well as just gives us an idea how we're doing. And we always like to know how we're doing, because otherwise it just seems like I'm screaming at a muted microphone. Okay, so it's a little bit tricky when you're just talking forever here. So Yatin, there's no link right now because it needs to be downloaded, processed, edited, and put on YouTube. But you can go to youtube.com/adamjdmartin, and you will find that recording there by the end of the week. So thank you everybody for attending. We'll see you back here next week, 6 o'clock. You know the time, you know the place. And of course, we're probably going to go late next week too, and just pack you guys up with value. So have a great night, everybody. We appreciate all of you. And as always, have a good night.
See you on the next one, guys. Thanks for joining. And really hyped actually about the next one. We are going to be having a guest on, and it's going to be a realtor, and the topic is actually going to be realtor versus wholesaler. How the heck can they work together? So really, really excited about that one, and for our guests to come on. Definitely going to have a little bit of heat going on between realtors and wholesalers. So I hope you all can tune in for that one as well.